we give you information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
What is coming to me?
And good afternoon. Okay, the market has another spin. That's right. Unbelievable, isn't it? So, they say about great men, they never change their mind. Once they make a decision, they don't change it. But they will change their direction. That's what happened with Powell. If you recall, we had a huge drop in NVIDIA. Let me give you the numbers here. So NVIDIA, if we go back to, I want to make sure I give you the right numbers here. If you go back to NVIDIA on October 31st, we had a big drop in the market. The market just went down about 700 some odd points because he says he's not going to, he decided to take the rate cuts off the table. Now, he didn't say that exactly, but the way he explained it, you know how he talks, that's what you can ascertain from his jibber jabber. And the market went down. People were all upset. Today, he turns around and does the opposite. He says, oh, no, I'm sorry. Okay, I think I may put it back on the table. So 1 minute he takes it off the table, next minute he puts it back on the table. That's why when you're trading stocks and you see all this volatility, these big wide swings like we saw in the last couple of days, you've got to watch the trend. Don't listen to them. The biggest mistake everybody made yesterday, and I told my members this, my gang, I showed them, watch how everybody's going to make a mistake. Yesterday when NVIDIA rallied big in the morning, the minute the market opened, because they beat earnings, right, which I explained to you yesterday was nothing but a trap. They beat earnings. And I said, sell into it. If you still have profits, sell into it. Because it's not going to hold. And sure enough, look what happened. If you look at the chart, went right up, made a new high. Made a high, though, of 196. And I'm watching the trend. The trend's your friend. The trend's going down. In fact, if you look, we had going back to October 29th, we knew there was a problem with NVIDIA. Because every time it pulled back and started to rally, like for example, when it pulled back from, let's just go from, let's use October 29th, when it was around at 212, and then she pulled back to November 7th on a low of about 178. What happened? Everybody jumps in and they start going back, start buying it again. The FOMO start going in. The tourist traders jump in. They got to get in, buying a dip. That's the last thing you do is buy on that dip. And look what happened. It never reached the high. And you can see my chart, the color code stayed red, telling us, no, there's not enough money coming back in, don't buy it. And then it collapsed again. And then we had the earnings. Everybody, they said, oh, big surprise. Next morning, bam, all the shorts start covering because they knew they're on the wrong side of the trade. Then what happened? The end of the night, bam, goes right back down again. This morning, the market's gone again, selling off again. NVIDIA's selling off again today. Then Powell makes this announcement today. He may decide to put the rate cut back and goes back up again. But look at all the volatility. If you just take, for example, take from October 29th to the low of today, of November 21. So we'll go from the high of 212.19, October 29th, and we'll go to today's low so far of the day is 172. If you look at all that movement, all that volatility, up and back down, what stayed constant was our chart. The chart showed that the trend from October 28th stayed consistent on the way down all the way to this afternoon. So all these rallies, when you had a rally from November 7th on the low of 178, that rallied up to a high of 199, came back down again to a low of 179, rallied again to another high of 196, and then it came back down again. I mean, you get dizzy. You've got to watch your trend. The trend is your friend. It's your smoothing mechanism. Remember, when you look at your volume bars, that's the gasoline, that's the fuel. That creates all this movement in these candlesticks, up one day, down, up one day, up, wait, next day, down. And then you have all the jibber jabbers on TV. All the jibber jabbers lying through their teeth, or they're not lying, most of them are just incompetent. That gets you dizzy. So always watch your trend. If you've been with us and you've been in that same trend going down since early on, you wouldn't have gotten hurt. You would have stayed with your short position because one, it stayed red, but it was constant. So that's what is going on. Yesterday, what happened was when people were jumping back into this stock that morning, when that next morning after the earnings, they're going crazy buying this stuff. Get me in, get me in. The smart money was selling short. The smart money was selling short. And the real smart money, if they were still in when the NVIDIA went up, and when NVIDIA took off yesterday and went up, they sold into it. And they're saying to the tourist investors, to the FOMOs, here, take ours, take ours, take ours. Now, the other big problem that's going on that folks don't understand is we have stagflation upon us. And I'll talk about that in a moment. But the BLS is lying about that. And I'll explain that in a moment. But let's stay to Oracle. So now there's a tremendous amount of thunderstorms around NVIDIA, around AI. Oracle. Since AI deal, I told you this yesterday, in September, they have lost their market cap value, $315 billion. They now just disclosed for the next 5 years, their cash flow is going to be negative. Oracle's spending $35 billion just to keep the lights on. Unbelievable. So what's happening is all the hype about AI is outperforming what's going on. Jobs. We know now that jobs, they're killing our jobs. They're killing our jobs. And by the way, if you're still in NVIDIA, stay with your short position until your trend changes. Stay with your short position. If you go start buying, every time they tell you to buy, NVIDIA, you're going to keep losing money. 90% of retail traders lose money. That's right, 90%. They don't understand that. Now, AI is losing a tremendous amount of jobs. So yesterday they came out, this really was unbelievable. They go, oh, look at our jobs. September, 119,000 jobs. Here, listen, play that cut for me, Willie, the one that's racked up on the great job numbers.
And here we go. This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 will be the best since April when we were up 158,000.
Okay, go ahead. Keep going. Hello? I'm listening. Did you leave something out? Where the hell did he go? Come back here. Here's what he didn't want you to know. What he didn't mention is from January 1st of this year to August, We have lost 806,000 jobs. September, you give me 119,000, I'm supposed to do cartwheels? What are you, nuts? In fact, the job numbers that we have lost, the 806,000 from January to August, that's bigger than the total of all 2024. So anyway, so what's going on with NVIDIA now, you got nothing but a trap. They set a trap for the shorts. People didn't understand that. Corporations hate people that short their stock. The CEOs hate it. So they set people up during earnings. They make sure that before the earnings come out, they will make sure their analysts will tell you a lie. They'll make sure that the analysts will say, oh, our estimates are at 54 billion, when the analyst already knows it's 57 billion for sales. They're going to tell you that the estimates for earnings $1.26. They know it's 1.30. So they lie to you. They're setting a trap for all the shorts. They want to get rid of these shorts. So when they come out and they say, oh, we beat, look, oh my God, we beat, boom, market goes up, the shorts are caught, they got to buy their stock back. And then who jumps in then? The tourists who don't know what the hell's going on. They see the stock going up yesterday, right? It was at 184. Get me in before it gets to 185. Get me in before it gets to 185. The other tourists jump in. Get me in before it goes to 186. And they have no idea you got more money going out than going in. That's what the chart, my Pro 2 is showing. And you got a trend that's going down that confirms it. Unbelievable. So, they caught the shorts. They beat the shorts over the head. That's what they were doing. They caught the trap. Now, the beautiful thing about the trap, there's two phases. The other part of the phase of the trap is they know once they report those beats that a slew, like I told you yesterday, a slew of upgrades come in. Buy, 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 buy. Everybody jumps in. And they slaughter the shorts more. But who do you have buying? You still have the tourists, you still have the FOMOs in there buying. Fear of missing out. It's crazy. It's a trap. The first part of the trap was successful. Then they spring that second part of the trap when you get that slew of new buy recommendations from JP Morgan, Citi, Goldman Sachs, Morgan Stanley. So you remember what's going on. JP Morgan, Citi, Goldman Sachs, Morgan, they're the big boys. They're the ones, remember, they compete with each other to go represent the police union of Chicago, the police union of Boston, the steel workers, the contractors, the construction workers, cement workers, steel workers. They all compete for them. So what do? They'll make sure, if you look at what happened with NVIDIA, when NVIDIA rallied, and let's just take from October 22, when it rallied all the way up to October 29th, had a beautiful rally, and then what happened? All of a sudden, the buyers, who's the buyers? Big institutions, they dried up. And all of a sudden, the trend changed from going up to down. And then that was it. The stock started to pull back. It started to pull back. So the smart money was in there selling short. But on the way up, who's buying? Again, the FOMOs, they buy right at the peak. So here's what they do. So they turn around, Goldman Sachs, Morgan Stanley, Citi, Bank of America, Wells Fargo. Remember, let's go back. From September 4th, they have big buy recommendations, buy, all the way up. Buy. So you go from September 4th, you go over to October 23rd, you go to October 28th, you go to where it peaked in October 28th, buy. Now, when it started to roll over and they pulled the money out of the market, did Goldman Sachs, did Citi, did Morgan Stanley, did Wells Fargo change They're rating from a buy to a sell. It's going down. Money's pouring out. Your trend's going down. Seeing money's pouring out. No, they keep the buy recommendation in because they know the psyche of the people.
1 minute.
They know they can feed them. Keep buying on the dip. Keep buying on the dip. Cost average down. Cost average. Why do they do that? Why do they keep a buy? If you had a buy recommendation, and now I'm talking about the big boys, Goldman Sachs, Morgan Stanley, Citi, Bank of America, Wells Fargo. If they had a buy recommendation for September 5th, all the way up to November 3rd, and then NVIDIA started to drop from November 3rd to where we are today, November 21, going down. Why aren't they changing their recommendation to a sell? Because they need to get their clients out. The steel workers, the police unions. So all the way the stock's going down, who's buying? You got the tourists in there buying. You got the FOMOs in there buying. And why do they do that? Why don't they just change it to a sell and give you a short recommendation?
7,
I'll tell you why when we come back. So why do they lie to you?
3, 2.
Why do they keep it as a buy when the market's going down, the stock's going down? I'll tell you when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. So here's the question. This is what people don't understand. Why is it when NVIDIA had a buy on September 5th, all kinds of buys, recommendations, from September 5th up to November 3rd, why didn't they change that to a sell when it dropped from November 3rd? The high was, I'll give you a percentage, will you give it to me, from the high of 221 to the low of today of 172.
20%.
So we had a drop of 20%. That's a crash. 10% is a correction. This stock crashed from November 3rd, 20% to November 21, but you still had, when you looked it up, it had buy Everybody had a buy recommendation. So what do they tell you to do? They keep the buy on to tell you what they train you. They trained you in your mind. They took parking space in your head since the first time you ever traded was never short. Never short is dangerous. If you short, you're going to go blind. If you short, you're going to die. Shorting's the worst thing in the world. Don't short because they're setting you up. Because the reason they keep the buy recommendation on, again, they have the biggest brokerage houses, Goldman Sachs, Citi, Morgan Stanley, Wells Fargo. They represent the biggest unions, police, steel workers, contractors, the biggest in the country. They make a fortune. They always got to make the money. So they got to get them out. So let's say they made them a ton of, let's say from September 5th up to November 3rd, they made them $1 million. Just use that as a fun number, $1 million. Now they got to get them out, and the market's collapsing. Can you imagine if they changed that rating from, we recommend from a buy to sell, what would happen? That stock market would have gone down so fast, or NVIDIA would have gone down so fast from November 3rd to today. I mean, it'd be like, your desk would be shaking, your computer's falling off your desk, it'd be unbelievable. So they don't do that. And they got to get their customers out. And also remember this, those same firms, those same 5 big investment banks, they go after they compete for the same clients every year. So they got to get them out. So you think they're going to just turn and say, okay, we got to get our recommendation now. We've had a buy recommendation, okay, from September 5th, and here we are, look, November 3rd, and NVIDIA is going to collapse. We can see it. But we got to get our members out. So here's what we're going to do. We're going to continue to take parking space in the heads of retail investors, in the heads of the tourist investor, and in the heads of the FOMOs. They should cost average down. Cost average down. By God, if you bought the stock at $212 and now NVIDIA it dropped from 212 to 102 or 192, buy more of it. Buy more. Because if you bought it at 212 and it's now 192, they'll convince you if it was a great deal at 212, it's a fantastic deal at 102. And people believe it. They've taken parking space in your head, never short a stock, stay in it, and add to your position. Add to it. Are you nuts? Worse. Instead of shorting, so they'll either tell you, okay, on the way down, cost average down. Cost average down. Or buy on the dip. And you're getting slaughtered. You never cost average down or buy on a dip when your trend is going down. Because every time you do that, you are fighting all the big institutions that are selling short against you. That's why you keep losing money. Now, here's a good example. Enron. Remember Enron? Let me show you how they screwed everybody there too. So the next crash, and we're going to get a crash now. Don't wait outside my house tonight to stone me to death. Sorry to tell you, but we are going to get a crash at some point. Look at Enron. Enron was doing fantastic. You remember Enron? Back in 2000, doing fantastic. Thing going straight up every day. What they have on it? Buy, 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 buy. Every recommendation was to buy. Every brokerage house, buy, 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 buy. And then when Enron peaked, what happened? They knew damn well that Enron was going to collapse. But did they take the recommendation from a buy to a sell? When Enron, that stock broke below the 3 moving averages, they're on the bottom of their support. They lost their support. They're below the 200, below the 50, below 25. Did they say to you, their client, Let's turn around and short. We got to short. Oh, no, they're not going to do that. Because since you were an infant, the first stock you bought, you were told never short. It's a terrible thing. You're going to go blind. Don't short. But here's what's good to do. If you bought Enron at $200, today it's $100. Isn't that fantastic? You can buy more of it at $100. Now, I'm going to try to find some more shares for you. I don't know if I can. I don't know if I can find. It's going to be tough to find those shares at 100. Everybody wants them. And then what happens? You get a call. You know Enron? Yeah. You know the shares you got 200? I got you more for 100. What a great cost averaging down this is. Fantastic. And you call your wife. George did for me, our broker. You know the stock, Enron, we bought at 200 shares, now 100? He bought some more. I just gave him another 50 grand. Isn't that great? Can we have him over for dinner? What a great guy. Stock keeps going down, keeps going down. But what do? You keep buying because they took parking space in your head ever since you started trading. Never short. It's dangerous. You're going to lose everything. Oh, but you know the stock you bought for 200? Now it's a great time to buy some more at 100. Then the stock goes down again. Then it goes down again. And all the way down, they're trying, buying a dip. Cost average down, buying a dip. Now, what are they doing? What's Goldman Sachs, Morgan Stanley, all your brokers doing? They're shorting you, making a fortune. So why didn't they change it to a sell short when Enron started to collapse? Why did they, again, change to, hey, sell recommendations? No, it was buy recommendations because they got to get their clients out. Remember, Goldman Sachs, Morgan Stanley, these are the biggest brokers in the world. They represent the biggest unions in the world. They got to take care of them. You, the retail customer, you're bait. You're just plain bait. They use you. They know they can take parking space in your head. They know you have a herd mentality. They know this. They know you're a person, when you lose on a trade, you'll never say, gee, I better see what I did wrong. I did something wrong. I better learn from it. Let me see what I did. No, they know you're going to blame the dog. You say, oh, the minute I put that trade on, my wife came in and wanted me to empty the garbage. Oh, gee, the minute I put that trade on, the airplane went over my house, distracted me. See, they know the mentality. They know the mentality. So that's how they catch everybody. So that's what happened with Enron. That's going to happen with NVIDIA. That's going to happen with the Magnificent Seven stocks. We're going to go through that again. Because they will take parking space in your head. Oh my God, don't short. Because they got to get their people up. So here, take a look at, this is very interesting. I don't know if you remember this, but it was back in October 2001, Kramer was telling everybody, okay, on the way down, keep buying, cost average down, buy in the dip, it's a great stock. Then on October, I think it was 16th, he gets out, and he says, if you don't buy Enron, you're a coward. If you don't buy Enron, you got to buy it now. This is the best stock in the country. Get in there and buy it. Okay. Everybody listened. They all bought. Stock went up for a little bit, sure. And then what happened? The 5 biggest brokerage houses in the world now got all their clients out. And they've been making a fortune shorting against you. While they're telling you to cost average down, while they're telling you to buy in a dip, they're shorting you. So now the clients are out. What do? They pull their bids, and that's when it collapsed. That's when it collapsed between November and December, those 4 weeks. Collapsed. Remember that? So you have history on your side now. You have history. You think it's going to be any different? What's going to change? You think Wall Street has changed? You think Wall Street has found God? Wall Street, are you kidding? They're miserable people. They're amoral people. These people have, when they go to work, man, the word integrity, their motto on Wall Street, if I can just get rid of my integrity, the rest will be a piece of cake. That's who these people are. You don't need them. The problem, you're always losing money, and 90% of you lose money in the stock market. 90%, because you refuse to learn how to sell short, because you think something's going to happen to you. Now, let's go take a look at the stocks that are leading today. And by the way, I don't have enough time, but we are going to hit stagflation. You want to have some fun? Hit stagflation. Okay? Stagflation is the worst thing in the world. You can't get out of stagflation. It's totally different than a recession. I've been through stagflation in the 70s. It is miserable because what you do that works to get you out of recession, if you use that same thing to try to get out of stagflation, you'll destroy the country. It's almost impossible to get out of it. But they're lying about that too. They're saying, oh, there's no recession, we're in the middle of stagflation. Stagflation has slow, okay, very slow economic growth. Boy, do we have slow economic growth. Unemployment, our joblessness is going up. I just gave you the numbers. Yesterday they came out, they're all excited. They were celebrating. They were celebrating in the streets. Oh, we had 119,000 jobs in September. But I went, hey, look over here. I kept laughing. Hey, look over at me. Hey, wait a minute. Do you remember? Oh, no, you can't hear me? Remember now. Remember, we lost 800,000 jobs from January to August. We just got 119,000. What the hell good is that? So now you're going to have, here's going to be your stocks, your Magnificent Seven: Apple, Microsoft, NVIDIA. Okay, you're going to go your semis that make up the whole AI world. Look at what's going on with Oracle. Remember this. The same thing that happened to the internet in 2000, the collapse. It survived. And we're better for it. But you always have, remember when Wall Street gets their dirty, filthy, crooked hands on something, it never can be good. They strip all the parts out. They strip all the value out. That's how they are. But we were better for it. The internet's changed our life, changed the world. But look, the pain we had to go through during the dot-com. Look at the pain. It's the same thing with AI, but AI is going to be worse, 10 times worse, when AI falls apart. And it will. But if you know how to short, what difference does it make? Why don't you want to make money when the stock's going down, for God's sakes? Oh, I know you were told. Oh, no, never short. Oh, my God, never short. You're going to go blind. So look at what you got in front of you. Micron Technology setting up like Enron. Same thing. If you look at Enron's chart, from where it started at the low in its heydays, and then rallied and rallied and rallied, and then turned over and collapsed, looks just like Enron. AVGO, Taiwan Semi, looks just like Enron. When those stocks break through their 3 moving averages, and they're on the bottom side of their 200-day moving average, you got the history. We got the proof. You shouldn't be shocked that we're going to have a crash. Join my gang, free for 10 days.
Listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.